This is the update for Wednesday, the 18th of November of 2021. It was a pretty busy day. There was 18 dividend payments for a total of 72 cents. And I also had €100 that I could deposit. And I have the €1 recurring deposit. So nice little bit to reinvest. But I put the €100 into my pie of monthly paying stocks. And there's 43 of them at the moment. So it gives each one about €2 or €3. And also the dividends and the recurring deposit, I think I will put a little bit into this new spin-off that Realty Income had, which is Orion Office REIT. Yeah, just to show a little bit of that doesn't look good. Just to show a little bit of support to the new edition. I think I'll throw in €1. But I think what happens when I receive shares like this as a spin-off, I remember a couple of months ago there was a spin-off of a company and I received the cash equivalent because Trading 212 didn't allow share distributions to happen, but now they've happened multiple times, so I think they've started to allow it. But this one, Loyalty Ventures, was another spin-off. It was about the same. I ended up with like 60 cents from the spin-off and put in €1. And I think the reason this is so high is because this 60 cents is basically pure profit. So my position, I have paid nothing into this position. See, the return is 61 cents on a 61 cent investment. So it's basically 100% profit. So what will happen is when my €1 goes in, it will probably be a similar number to this, 59% up or 60% up, because half of it is complete profit and the other half is what I just put in at the current price. That appears to be what's happening with share distributions from spin-offs. But at least Trading 212 appears to be allowing it, which is always nice. Get a few new additions to the portfolio over the years. And there's also the leaderboards. The top few have still remained unchanged. The top 3 are unchanged anyway. Devon Energy is still number 1, 60% up. Number 2 is Loyalty Ventures, 59% up. My Blackstone position is 54% up. Number 4, this is a new one, Albemarle, 47% up. Next is Innovative Industrial Properties, 46% up. Then we have Novo Nordisk, who's about 45. Raiffeisen Bank is about 43. Next is KLA, which is 43 again. Croda International has stayed the same as yesterday. It's 42% up. Number 7 from the top, at about 43%. Next is Preferred Apartment Communities, which has stayed the same as yesterday. And Rolls-Royce Holdings is now 10. And the worst of the worst, Deutsche Lufthansa, ticker symbol LHA, is now the worst position. It's 21% down. Next is Rubis, 20% down. Third is another Deutsche Lufthansa. It's ticker symbol DLAKY. Fourth is Alliance Data Systems. Fifth is Deutsche Euroshop. Both of those are 18% down. Next is Henkel Preferred Shares, about 18% down. Then we have Flowserve, 17% down. Swedish Match is also 17% down. Ninth, we have Marston's, about 17% down. And 10th is now Adler Group, about 16% down. So I think that the newest one here into these worst of the worst pile is Flowserve. So I think I will put the remaining dividends and €1 into there, just to give it a bit of support. Yeah. So hopefully when the American market opens, that should bounce back up, fall out of the 10 worst stocks in the portfolio. The first dividend payer of the day was Stellus Capital Investment, ticker symbol SCM.
and it's about $14 per share at the moment, based in the USA, and it's in the miscellaneous financial services industry. It's an externally managed, closed-end, non-diversified management investment company, which is treated as a business development company. The company originates and invests primarily in private middle market through first lien, unitranche, second lien, and unsecured debt financing, often with corresponding equity co-investments. Its investment objective is to maximize the total return to the company's stockholders in the form of current income and capital appreciation. Its investment activities are managed by the company's investment advisor, which is Stellus Capital Investment, an investment advisory firm led by Robert T. Ladd and its other senior investment professionals. It sources investments primarily through the network of relationships that the senior investment professionals of Stellus Capital Management have developed with financial sponsor firms, with financial institutions, middle market companies, management teams, and other professional intermediaries. So Stellus Capital Investment pays a dividend once a month, and this was an ordinary payment of 7 cents per share, which is down 1 cent from the previous. Its current market cap is $277.3 million, has a PE ratio of 13.72, current revenue of $56.6 million, an earnings per share of $1.04, and a dividend yield of 7.87%. Its quarterly profit margin is 75%, and annually is about 35%. Its quarterly debt to assets is 66.6%, and annually is about 60%. And its annual cash flow from operating is negative $3.49 million, and from financing is $5.83 million. But there's no figure given for investing. The second dividend payer was Proctor & Gamble, ticker symbol PG, and it's about $146, closer to $147 per share. Also based in the USA, and it's in the personal and household products industry. So the company is focused on providing branded consumer packaged goods to the consumers across the world. The company operates through 5 segments, which are beauty, grooming, healthcare, fabric and home care, and baby, feminine and family care. The company sells its products in countries and territories primarily through mass merchandisers, grocery stores, membership club stores, drugstores, department stores, distributors, wholesalers, baby stores, specialty beauty stores, e-commerce, high-frequency stores, pharmacies, electronics, and professional channels. It offers products under the brands such as Head & Shoulders, Herbal Essences, Pantene, Rejoice, Olay, Old Spice, and many, many more familiar faces. So it pays a dividend every quarter, and this was an ordinary payment of 73 cents per share, which is the same as the previous. Currently has a market cap of $354.3 billion, has a PE ratio of 25.4, current revenue of $76.1 billion, an earnings per share of $5.76, and a dividend yield of 2.38%. Its quarterly profit margin is 18%, and annually is about the same. Its quarterly debt to assets is 60%, and annually is about 61%. And its annual cash flow from operating is $18.37 billion. From investing is negative $2.83 billion. And from financing is negative $21.53 billion. Our dividend payer was People's United Bank, ticker symbol PBCT. It's about $18.50 per share at the moment. Also based in the USA, and it's a regional bank. It's a holding company for People's United Bank National Association, which is the bank itself. And through the bank and its subsidiaries, the company provides commercial banking, retail banking, and wealth management services to individual, corporate, and municipal customers. The company operates through two segments, which are commercial banking and retail banking. The commercial banking segment consists of commercial real estate lending, middle market and business banking, mortgage warehouse and asset-based lending, and the equipment financing operations. The segment also provides treasury management services, capital market capabilities, and commercial deposit products. The retail banking segment includes consumer lending, which itself includes residential mortgage and home equity lending, and consumer deposit gathering activities. This segment also provides brokerage, financial advisory services, investment advisory services, investment management, and financial management services. So it pays a dividend every quarter. This was an ordinary payment of 15 cents, which is down 1 penny from the previous. Currently has a market cap of $7.97 billion, has a PE ratio of 16.13, current revenue of $1.82 billion, earnings per share of $1.16, and a dividend yield of 3.92%. So it only gives the net income, but for the quarter it was $139.7 million. And for the last year was about $220 million. Its quarterly debt to assets is about 88%, and annually is about the same. And its annual cash flow from operating is $842.9 million. From investing is negative $1.32 billion. And from financing is $3.92 billion. The fourth dividend payer was Omega Healthcare Investors, ticker symbol OHI. It's about $29 per share, also based in the USA, and it's in the real estate operations industry. It's what's called a real estate investment trust, or a REIT. The company maintains a portfolio of long-term healthcare facilities and mortgages on healthcare facilities located in the USA and the UK. It operates through this segment, which consists of investments in healthcare-related real estate properties. The company provides lease or mortgage financing to qualified operators of skilled nursing facilities, or SNFs, and assisted living facilities, or ALFs. Also independent living facilities, rehabilitation, and acute care facilities. The company's portfolio of real estate investments consists of healthcare facilities located in the US and the UK that are operated by third-party operators. The company, through its subsidiary Connected Living, is engaged in offering technology platforms that enables communication and connection for aging adult communities. So Omega Healthcare Investors pays a dividend 4 times a year, and this was an ordinary payment of 56 cents per share, which is down a little bit from the previous 57. Its current market cap is $6.88 billion, has a PE ratio of 30.34, current revenue of $892.38 million, an earnings per share of 95 cents, and a current dividend yield of a nice 9.31%. Its quarterly profit margin is about 50%, and annually is about 18%. Its quarterly debt to assets is 58.7%, and over the last year is about 60%. And its annual cash flow from operating is $708.26 million. From investing is negative $89.06 million, and from financing is negative $485.5 million. The next dividend payer was Realty Income. Ticker symbol is O. It's about $71.50 per share, and it's another real estate investment trust based in the USA. So it's focused on acquiring and managing freestanding commercial properties under a long-term net lease agreement. The company owns and operates a diversified portfolio of about 6,500 properties with an occupancy rate of 97.9%, or 6,452 properties and 140 properties available for lease. Its business presences are in 51 separate industries, located in 49 US states, also in Puerto Rico and the UK, with approximately 110.8 million square feet of leasable space. The company's 6,592 properties are single client properties, and 6,419 were leased, and the remaining are multi-client properties. The company's property types include retail, industrial, office, and agricultural. So it pays a dividend once a month, and this was an ordinary payment of 20 cents per share, which is the same as the previous one. Current market cap is $27.81 billion. Has a PE ratio of 51.75. Has a current revenue of $1.65 billion, an earnings per share of $1.38, and a dividend yield of 3.96%. Its quarterly profit margin is about 27%, and annually is about 24%. Its quarterly debt to assets is 46.15%, and annually is about 47%. And its annual cash flow from operating is $1.12 billion. From investing is negative $2.03 billion, and from financing is $1.69 billion. The next dividend payer was Main Street Capital, ticker symbol MAIN. It's about $46 per share at the moment, pays a dividend every month, and this was an ordinary payment of 17 cents per share, which is the same as the previous. So Main Street Capital is an investment company primarily focused on providing customized debt and equity financing to lower middle market companies and debt capital to middle market companies. The company's portfolio investments support management buyouts, recapitalizations, growth financings, refinancing, and acquisitions of companies that operate in a variety of industrial sectors. Its principal investment objective is to maximize its portfolio's total return by generating current income from its debt investments and capital appreciation from its equity and equity-related investments. And these include warrants, convertible securities, and other rights to acquire equity securities in a portfolio company. The company invests in secure debt investments, equity investments, warrants, and other securities of low middle market companies based in the US. The MSC Advisor 1 LLC is the external investment manager. Now its current market cap is $3.2 billion. Has a PE ratio of 102.9. Current revenue of $222.6 million. Earnings per share of 45 cents, and a dividend yield of 5.48%. Its quarterly profit margin is 109%, and annually is 13%. Its quarterly debt to assets is 48%, and annually is 45.3%. And its annual cash flow from operating is negative $54.08 million, and from financing is $30.76 million, but there's no figure given for investing. The next dividend payer was Kinder Morgan, ticker symbol KMI. It's about $16 per share at the moment, also based in the USA, but it's in the natural gas utilities industry. It operates through 4 segments and has a natural gas pipeline segment which is engaged in the ownership and operation of interstate and intrastate natural gas pipeline and storage systems. Also natural gas gathering systems and processing and treating facilities. It also deals with natural gas liquids, fractionation facilities and transportation systems, and also liquefied natural gas, regasification, liquefaction, and storage facilities. Its products pipeline segment is engaged in the ownership and operation of refined petroleum products, crude oil, condensate pipelines, gasoline, diesel, and jet fuel. Its terminal segment owns and operates liquid and bulk terminal facilities located throughout the USA. And its CO2 segment is engaged in the production, transportation and marketing of carbon dioxide to oil fields and the ownership and operation of a crude oil pipeline system. So it pays a dividend 4 times a year. This was an ordinary payment of 22 cents per share, which is the same as the previous. Its current market cap is $41.19 billion, has a PE ratio of about 28, current revenue of $11.7 billion, has an earnings per share of about 60 cents, and a current dividend yield of 6.41%. Its quarterly profit margin is about 13%, and annually is about 1%. Its quarterly debt to assets is 56%, and annually is about the same. And its annual cash flow from operating is $4.55 billion. From investing is negative $911 million, and from financing is negative $2.64 billion. The next dividend payer was Hormel Foods, ticker symbol HRL. It's about $42.50 per share at the moment. It's in the fish and livestock industry, and it's engaged in the production of a range of meat and food products. The company operates through 4 segments, which are grocery products, and this is engaged in the processing, marketing and sale of shelf-stable food products sold to the retail market and health, and also consisting of nutritional products, including muscle milk protein products. There's also refrigerated foods, which consist of the processing, marketing and sale of branded and unbranded pork, beef, chicken and turkey products for retail, food service and fresh product customers. There's also the Jenny O Turkey Store, which consists of the processing, marketing and sale of branded and unbranded turkey products to retail, food services and fresh product consumers. And there's an international and other segment, which includes Hormel Foods International Corporation, and they manufacture, market and sell the company products internationally. The company's brands also include Planters Nutrition, Planters Cheese Balls and Corn Nuts. Hormel Foods pays a dividend every quarter, and this was an ordinary payment of 20 cents per share, which is down 1 cent from the previous. Its current market cap is $23.37 billion, has a PE ratio of 25.92, a revenue of $9.61 billion, earnings per share of $1.66, and a dividend yield of 2.28%. Its quarterly profit margin is about 6%, and annually is about 9.5%. Its quarterly debt to assets is about 45%, and annually is about 35%. And its annual cash flow from operating is $1.13 billion. From investing is negative $656.32 million. And from financing is $566.17 million. Next dividend payer was Hasbro, ticker symbol HAS. It's about $99 per share at the moment. It's in the recreational products industry, also based in the USA. And it's a play and entertainment company. Its operating segments include the US and Canada, international, and entertainment and licensing. From toys and games to content development, including television programming, motion pictures, digital gaming, and consumer products licensing program. Hasbro fulfills the fundamental need for play and connection for children and families around the world. The company's US and Canada segment is engaged in the marketing and sale of its products in the US and Canada. The international segment is engaged in the marketing and sale of the company's products to retailers and wholesalers in most countries in Europe, Latin and South America, and the Asia Pacific region, and through distributors in those countries where it has no direct presence. The entertainment and licensing segment includes the company's consumer products licensing, digital gaming, television, and movie entertainment operations. So it pays a dividend every quarter, and this was an ordinary payment of 57 cents per share, which is down 1 cent from the previous. Its current market cap is $11.64 billion, has a PE ratio of 20.36, current revenue of $4.72 billion, earnings per share of $4.17, and a dividend yield of 3.2%. Its quarterly profit margin is negative 4%, and annually is 11%. Its quarterly debt to assets is about 75%, and annually is about 66%. And its annual cash flow from operating is $653.06 million. From investing is negative $60.95 million, and from financing is $2.81 billion. Dividend payer was EPR Properties, ticker symbol EPR. It's about $50 per share at the moment. It's another real estate investment trust based in the USA. It pays a dividend every month, and this was an ordinary payment of 21 cents per share, which is the same as the previous. So it operates through two segments, which are experiential and education. The experiential segment consists of property types, which include about 177 theatres, some eat and play properties, 57, which includes 7 theatres located in entertainment districts, 18 attraction properties, 13 ski properties, 7 experiential lodging properties, 1 gaming property, 3 cultural properties, and 7 fitness and wellness properties. The education segment consists of property types which include about 65 early childhood education centres and 9 private schools. The company's investment portfolio includes ownership of and long-term mortgages on experiential and education properties. All of the company's owned single-tenant properties are leased pursuant to long-term triple net leases. Its current market cap is $4.03 billion. There's no PE ratio given, which is not a good thing. Its current revenue is $414.66 million, has a negative earnings per share of $1.43, and a current dividend yield of 5.57%. Its quarterly profit margin is about 23%, and annually is negative 32%. Its quarterly debt to assets is 54%, and annually is about 61%. And its annual cash flow from operating is $65.27 million. From investing is $133.99 million. And from financing is $297.17 million. The next dividend payer was Cross Timbers Royalty, ticker symbol CRT. It's about $13 per share at the moment. It's also based in the USA, and it's an express trust. The net profits interests are the principal asset of the trust. The trust receives net profits as income from the net profits interests, generally on the last business day of each month. The net profits interests consist of about 90% net profits interests, which are carved from producing royalty and overriding royalty interest properties in Texas, Oklahoma, and New Mexico, and about 11.11% non-participating royalty interests in non-producing properties located primarily in Texas and Oklahoma. The Trust's net profits interests consist of approximately 75% net profits interests, which are carved from working interests in over 4 properties in Texas and 3 properties in Oklahoma. It's all underlying royalties, underlying non-producing royalties, and underlying working interest properties are owned by XTO Energy. The underlying properties include over 2,900 producing properties in Texas, Oklahoma, and New Mexico. So Cross Timbers Royalty pays a dividend every month, and this was an ordinary payment of 5 cents per share, which is down quite a bit from the previous 13 cents per share. So they must have had a pretty profitable month last time. Its current market cap is $83.88 million. Has a PE ratio of 17.94. Current revenue of $5.31 million. Earnings per share of 78 cents. and a dividend yield of 7.27%. Its quarterly profit margin is 93% and annually is 88%. Its quarterly debt to assets is 33% and annually is 15.5%. And its annual cash flow from operating is $4.04 million and from financing is negative $4.67 million. But there's no figure given for annual cash flow from investing. The next dividend payer was Colgate Palmolive, ticker symbol CL. It's about $76 per share at the moment, based in the USA, and it's in the personal and household products industry. It's a household and consumer products company that operates through segments such as oral, personal and home care, and pet nutrition. The oral, personal, and home care product segment is operated through 5 geographic segments, which are North America, Latin America, Europe, the Asia Pacific, and Africa/Eurasia. The company is also engaged in various product categories of the personal care market, with operations in liquid hand soap, which it sells under Palmolive, Protex, and Soft Soap brands. The company manufactures and markets a range of products for the home care market, which include Ajax, Axion, and Palmolive dishwashing liquids, and Ajax, Fabuloso, and Murphy household cleaners. The company, through its Hills pet nutrition segment, manufactures pet nutrition products for dogs and cats. It pays a dividend every quarter, and this was an ordinary payment of 38 cents per share, which is the same as the previous. Its current market cap is $66 billion, has a PE ratio of 24.84, a current revenue of $16.47 billion, earnings per share of $3.15, and a dividend yield of 2.3%. Its quarterly profit margin is 14%, and annually is about 16%. Its quarterly debt to assets is 96%, and annually is 95%. And its annual cash flow from operating is $3.72 billion. From investing is negative $779 million, and from financing is $2.92 billion in the negative. The next dividend payer was New York Community Bank Corp, ticker symbol NYCB. It's about $12 per share at the moment, and it's a regional bank. It's a holding company for the New York Community Bank, which is the bank, and it's a New York State chartered savings bank that operates approximately 236 branches, 19 of which operate directly under the Community Bank name. The remaining 217 Community Bank branches operate through 8 divisional banks, which are Queens County Savings Bank, Roslyn Savings Bank, Richmond County Savings Bank, as well as Roosevelt, Atlantic Bank in New York, Garden State Community Bank in New Jersey, AmTrust Bank in Florida and Arizona, and Ohio Savings Bank in Ohio. The bank is a producer of multifamily loans in New York City, with a focus on non-luxury residential apartment buildings with rent-regulated units that features below-market rents. The bank also provides commercial real estate loans, specialty finance loans and leases, and, to a much lesser extent, acquisition, development and construction loans, as well as commercial and industrial loans. So it pays a dividend every quarter, and this was an ordinary payment of 14 cents per share, which is the same as the previous. Its market cap at the moment is $5.78 billion, has a PE ratio of 12.77, its current revenue is $1.71 billion, has an earnings per share of 97 cents, and a dividend yield of about 5.5%. Its quarterly net income is $149 million, and annually is $511 million. Its quarterly debt to assets is about 88%, and annually is about the same. And its annual cash flow from operating is $334.2 million. From investing is negative $1.03 billion in the negative, and from financing is $1.9 billion. The next dividend payer is Horizon Technology Finance, ticker symbol HRZN. It's about $17 per share at the moment, also based in the USA, and it's a specialty finance company that lends to and invests in development stage companies in the technology, life science, healthcare information, and services sectors. The company's investment objective is to maximize its investment portfolio's total return by generating current income from the debt investments it makes and capital appreciation from the warrants it receives when making such debt investments. The company is focused on making secured debt investments to venture capital and private equity-backed companies and publicly traded companies in its target industries. The company's debt investments portfolio consists of about 37 debt investments, and in addition to these, the company holds warrants to purchase stock, predominantly preferred stock, in about 60 portfolio companies. Horizon Technology Finance Management LLC provides investment advisory services to the company. So Horizon pays a dividend every month, and this was an ordinary dividend of 8.5 cents per share. Its current market cap is $359.5 million, has a PE ratio of 48.49, current revenue of $31.65 million, earnings per share of 36 cents, and a dividend yield of 6.82%. Its quarterly profit margin is about 60%, and annually is about 20%. Its quarterly debt to assets is 53%, and annually is about 48%. And its annual cash flow from operating is negative $25.28 million, and from financing is $55.66 million, but there's no figure given for investing. The next dividend payer was Broadmark Realty Capital, ticker symbol BRMK, and it's about $10 per share at the moment. It's another real estate investment trust based in the USA, and it's internally managed. So the company is specialized in underwriting, funding, servicing, and managing a portfolio of short-term first deed of trust loans to fund the construction and development of or investment in residential or commercial properties. The company offers construction loans, land development loans, heavy rehab or redevelopment loans, and bridge financing loans. Its construction loans are designed for vertical construction of projects such as multifamily housing, single-family housing, commercial office, and industrial buildings. Its land development loans provide funding for the soft costs and entitlements required for development, such as hiring architects, engineers, and environmental and other consultants. Its heavy rehab or redevelopment loans are designed for improvements on multifamily units and commercial, office, hospitality, and industrial buildings. Broadmark Realty pays a dividend every month, and this was an ordinary dividend of about 6 cents per share. It was $0.059 per share. Its current market cap is $1.34 billion, has a PE ratio of 13.76, has a current revenue of $122.36 million, earnings per share of about 73 cents, a dividend yield of 8.33%, and, sorry, I already said the dividend, about 6 cents per share per month. Its quarterly profit margin is about 71%, and annually is about 74%. Its quarterly debt to assets is 2%, very nice, and annually is 1%. And its annual cash flow from operating is $61.34 million, from investing is $34.88 million, and from financing is negative $111.06 million. The next dividend payer was British American Tobacco, ticker symbol BTI. It's about $35 per share at the moment. It's based in the United Kingdom, and it's in the tobacco industry. Pays a dividend every quarter, and this was an ordinary payment of 61 pence per share. 61 cent per share. So this is the US stock for the UK company. The company is a multi-category consumer goods company that provides tobacco and nicotine products. It has potentially risk-reduced products, which include vapor, tobacco heating products, modern oral products including tobacco-free nicotine pouches, as well as traditional oral products such as snus and moist snuff. Its THP includes Glow, Neosticks, and its hybrid products, which are vapor products include Vipe, Vuse, 10 Motives, and VIP, and modern oral includes white modern oral brands of EPOK, Lift, and Velo. The company's segments include the USA, the Americas and Sub-Saharan Africa, Europe and North Africa, the Asia Pacific, and the Middle East. The company's international and local cigarette brands include Vogue, Viceroy, Cool, Peter Stuyvesant, Craven A, Benson and Hedges, John Player Gold Leaf, State Express 555, and Shuangzi. Its current market cap is $78.89 billion. Has a PE ratio of 7.75, current revenue of $34.79 billion, earnings per share of $4.43, and a dividend yield of a nice 8.7%. Its quarterly profit margin is about 26%, and annually is about 25%. Its quarterly debt to assets is 54%, and annually is about the same. And its annual cash flow from operating is $9.79 billion. From investing is negative $783 million, and from financing is negative $7.9 billion. The second last dividend payer was Pembina Pipeline, ticker symbol PBA. It's about $33 per share at the moment. It's based in Canada, and it's an oil well services and equipment industry stock. It's a Canada-based transportation and midstream service provider. The company owns an integrated system of pipelines that transport various hydrocarbon liquids and natural gas products produced primarily in Western Canada. It also owns gas gathering and processing facilities and an oil and natural gas liquids infrastructure and logistics business. The company's integrated assets and commercial operations along the majority of the hydrocarbon value chain allow it to offer a full spectrum of midstream and marketing services to the energy sector. Pembina Pipeline Corp is structured into three divisions, which is Pipelines Division, Facilities Division, and Marketing and New Ventures Division. Pembina pays a dividend every month, and this was an ordinary payment of 14 cents per share, which is the same as the previous. Its market cap at the moment is $16.08 billion. Has a PE ratio of about 9, revenue of $7.23 billion, an earnings per share of $3.22, and a dividend yield of a nice 8.62%. Its quarterly profit margin is about 20%, and annually is about the same. Its quarterly debt to assets is 50%, and annually is about the same. And its annual cash flow from operating is $2.5 billion. From investing is negative $3.91 billion, and from financing is $1.35 billion. And the final dividend payer for today was Spirax Sarco Engineering, ticker symbol SPX. So it's about £163 per share, based in the UK, and it's in the miscellaneous fabricated products industry. It's an industrial engineering company with segments include Europe, Middle East and Africa, the Asia Pacific, the Americas, Steam Specialties Business, Chromalox, and Watson Marlow Fluid Technology Group. The company's businesses include Spirax Sarco and Watson Marlow. Spirax Sarco supplies engineered solutions for the design, maintenance, and provision of industrial and commercial steam systems. The Spirax Sarco Steam Specialties business also offers new steam systems steam system audits, engineered solutions, training and maintenance, as well as repair and operations. Watson Marlowe designs and manufactures peristaltic pumps and associated fluid path technologies. So its current market cap is £12.13 billion, has a PE ratio of about 70, current revenue of £1.19 billion, an earnings per share of £2.35, and a low dividend yield of 0.75%. Pays a dividend twice a year, and this was the first one I received from them. It was 38.5 pence per share. Its quarterly profit margin is about 17%, and annually is about 15%. Its quarterly debt to assets is 47%, and annually is about 51%. And its annual cash flow from operating is $259.2 million pounds. From investing is negative £51 million, and from financing is £152.5 million in the red. So that's all for this one. That was a long one, 18 payments. It's nice, it's getting closer and closer to the €1 per day threshold. But that's all for today, and I hope that you found this useful.